The last chapter, chapter 14, deals with supply chain technology. Specifically, we'll look at critical issues in technology selection and implementation, along with recognizing the technological innovations that are influencing supply chain management today. It's been said that information is the lifeblood of business, driving appropriate decisions and actions. Across the supply chain, store inventory replenishment decisions are based on point-of-sale data, carrier selection is driven by delivery service goals, and production schedules are derived from forecasts. There are three principal supply chain information requirements that support effective decision-making. First, the information in a system must meet quality standards to support fact-based decision-making. Second, the information must readily flow within and between organizations. And third, the information must support multiple types of supply chain decisions. Information quality is a critical characteristic of the knowledge flowing across the supply chain. The 7 R's definition of logistics applies to information as much as products with some slight alterations. Getting the right information to the right partners in the right quantity, in the right format, at the right place, at the right time, at the right cost. Change any right to wrong, and the capabilities of the decision maker will decline. Supply chain executives must ensure that proposed information technology investments truly enhance knowledge and produce tangible performance benefits. Of the 7 information standards, accuracy is perhaps the most critical. The information must be correct and depict reality. Otherwise, it will be difficult to make appropriate decisions. Information inaccuracies can lead to inventory shortages, transportation delays, governmental penalties, and dissatisfied customers. In terms of accessibility, information must be available to supply chain managers who have a legitimate need for it, regardless of their location or employer. Relevancy means that supply chain managers must have pertinent information to make decisions. They must know what information is needed and be able to quickly acquire only that which is applicable to their current situation. In terms of timeliness, the information must be up to date and available in a reasonable time frame. Transferability means the final characteristic of information has multiple meanings. Supply chain managers need the ability to transfer supply chain data from one format to another to make it understandable and useful. In terms of usability, information is useful only if it can drive effective decision making. Reliability means the information contained in reports and transaction data sets must come from reliable and authoritative sources within the organization and from trusted supply chain partners. The engagement of multiple stakeholders in supply chain planning and decision-making drives a need for multi-directional information flows in a supply chain. Internal information sharing supports cross-functional collaboration and organization-wide performance optimization. A failure to do so will prolong the problems of functional silos, myopic planning, and suboptimal performance. Information must also flow seamlessly between a company and its supply chain partners. A free flow of information will promote integrated decision-making and process synchronization. Shared insights regarding supplier capacity, production schedules, and inventory availability will facilitate alignment and efficient execution of downstream processes. Logistics service providers must also be kept in the information loop regarding upstream and downstream customer requirements. Additional support agencies must also receive and distribute critical information. Financial institutions participate in the movement of relevant information regarding payment and transactions. Government agencies require ongoing communication regarding trade data and regulatory compliance. Financial consequences can result from a failure to properly establish information flows with these organizations. With supply chain management taking on a more important and visible role in most organizations, the need for information greatly expands. Managers at every level of the supply chain require different types of information to excel in their roles. This intelligence is needed for strategic decision-making, tactical planning, routing decision-making, and execution and transaction processing. Strategic decision-making focuses on the creation of long-range supply chain plans that are aligned with the organization's mission and strategies. The required information is often unstructured and may differ from one project to the next. Tactical planning focuses on cross-organization linkages and supply chain activity coordination. The information must be readily available, support planning processes, and be in a flexible format that can be modified by the supply chain participants for use in their system. Routine decision-making leverages operational level information for rules-based decision-making. The input data needs to be standardized so that the information system can generate appropriate solutions. Execution and transaction processing uses fundamental information from supply chain databases, customer profiles, inventory records, and related resources to complete fulfillment activities. Let's look at system capabilities. The importance of supply chain information technology is well recognized by leading organizations. Apple, Amazon, Procter & Gamble, and other members of the Gartner Supply Chain Top 25 for 2015 are pursuing greater visibility of end-user demand data, digital synchronization of manufacturing with upstream suppliers, and the use of logistics control towers with sensors to reduce risk. To compete at this level, a company must succeed on three fronts. First, the system must facilitate excellent performance across the plan, buy, make, move, and return processes of a supply chain. Next, a cohesive network of integrated technologies, skilled people, and robust processes must be established. Finally, common risks must be identified and mitigated to maximize the return on technology investments. As supply chains grow increasingly complex, organizations need technology to help them thrive. Managing global relationships, collaborating with logistics service providers, and serving omnichannel consumers requires advanced information systems functionality. That is, information systems must support cross-chain visibility, agility, velocity, synchronization, adaptability, segmentation, and optimization. In terms of cross-chain visibility, managers need to control key supply chain activities. Having the most current data about the supply chain is a prerequisite for effective decision-making and rapid problem response by managers. In terms of agility, agile supply chains have the capability, capacity, and flexibility to deliver consistent or comparable cost, quality, and customer service under changing conditions. The speed of product flows across the supply chain must be aligned with customer expectations. The goal of multi-organization supply chains is to function as a single entity that produces and distributes the inventory needed to meet customer requirements. Organizations must strategically adapt the design and capabilities of a supply chain to evolving conditions. This requires a flexible, geographically dispersed network supported by strong technology to analyze options and properly allocate network capacity. Organizations must dynamically align their demand and supply response capabilities to optimize net profitability across each customer segment. Offering differentiated service levels to each segment, the organization can increase sales and reduce costs. To achieve peak supply chain performance, an organization must consider numerous trade-offs, effectively deploy its resources, and make the best possible decision. Supply chain optimization technologies use mathematical modeling tools to quickly run through the options to find the solution that facilitates success for all supply chain stakeholders. A company cannot purchase software for a single process and expect to fundamentally improve its supply chain. Instead, an investment is required in a supply chain information system, or SCIS, that provides critical knowledge links and automated information flows between internal processes with external partners. SCIS enable firms to streamline their supply chain processes and provide management with more accurate information about what to produce, store, and move. An SCIS initiative will go much smoother and add greater value when time is taken to properly link the technology to people and processes in an intentional and integrated fashion. The technology must be connected across the supply chain. People need to adapt to the full capabilities of the SCIS, and processes need to be updated to make use of the information that is generated through the SCIS. As mitigation strategies suggest, systems risk can be overcome. Many organizations successfully deploy SCIS to promote cost control, visibility, and service improvement. The key for supply chain leaders is to view technology implementation as a business improvement project. Technology alone cannot make ill-conceived processes highly productive or make effective use of poor quality data. Managers must avoid buying into the solution hype, resolve their process challenges prior to technology adoption, and remember the true role of technology: process enablement. Weak technology process alignment is another barrier to success. Software may be chosen by executives and technology specialists that do not understand supply chain processes or requirements. This can lead to ill-fitting solutions that fail to achieve their promise. To mitigate this risk, supply chain managers must be engaged in the technology selection process. Technology gaps can be a significant problem for organizations. Often, point solutions fix an individual supply chain problem, but don't address related issues or processes. Also, software may be purchased and deployed in a piecemeal fashion, leading to a patchwork quilt of technologies rather than a seamless information network. To reduce these gaps, organizations should create stable enterprise-wide platforms and adopt an integrated supply chain software suite. Cross-chain systems integration with suppliers, service providers, and customers is a stumbling block for some organizations. To overcome these integration woes, trading partners need to link their computer systems and transform the supply chain into a network of beneficial relationships. Poor planning and preparation for technology implementation is also problematic. The logical action is to mitigation methods. The logical action for mitigation methods follow a staged logical approach to adopting new technologies and to establish adequate budgets for technology installation, integration, and training.